This is the PKF Texas Entrepreneur's Playbook. I'm Jen Lemanski, and I'm back again with Frank Landreneau, one of our international tax directors. Welcome back to the Playbook, Frank.
Well, thanks, Jen. Great to be back.
So I know you talk a lot about ICDISC. How is that impacted by tax reform, and can you give us a little overview of ICDISC again?
That's a great question. Kind of backing up what ICDISC is, it's a vehicle to provide tax incentives for exports. It's rather dated. It was originated in the 1970s.
Oh, wow.
But more recently was used because of the difference between capital gains tax rates and dividends tax rates. Now that dividends tax rates are the same as capital gains rates, it was used to do a rate arbitrage. And the way it basically was, you had to actually set up an ICDISC entity, let that entity be the exporting entity. There are different variations, whether a commission disc or a buy-sell disc. Most people were using the commission disc. The reason was that you didn't have to change your operating procedures around exports, and it provided a nice tax benefit. Fortunately, the tax reform did not change or repeal the ICDISC, so that actually is still the law. Great.
And so, are there any considerations from tax reform that do impact it? Has it changed any rates, or what does that look like?
That's an equally great question. The answer is in the benefit with the ICDISC was really in the rate arbitrage.
Okay.
So now with the changing rates, so if you were an exporting company with an ICDISC, your effective corporate rate has just gone from 34% or 35% to now 21%.
Wow.
So the rate arbitrage using the ICDISC is not as great. In fact, it may actually be nil. If you were using a flow-through entity like an S corporation with an ICDISC structure, then there was a rate arbitrage as well, and that's actually still in play because the top rate for individuals is 37%. Versus the capital gains rates of 23.8%.
Okay.
So I would say if you've been using an ICDISC and your operating company is a C corporation at the 21% rate, I would say there are other strategies to look at. One, for example, is the deferral strategy, where you accumulate income in the ICDISC. Now, you run into issues with paying a minimum interest charge. That's where the IC comes in, the interest charge. But the strategy around ICDISC does change for C corporations because the rate arbitrage has changed.
Okay. Now, for tax planning purposes, are there any other considerations with the new tax reform law? Does anything else impact the ICDISC?
Yeah, I think in addition to what I said regarding the rate arbitrage change, particularly for C corporations, there's this new provision we talked about in earlier videos called FDII, the Foreign Derived Intangible Income, where that income is taxed at a 13.165%. That actually can be used side by side or along with the ICDISC.
Oh, good.
There's no double dipping, but there's some interplay between those two tax relief provisions.
So if you're doing exports or considering exporting, these are some things you'll need to be paying attention to.
Absolutely.
Perfect. We'll get you back to talk about some other international topics.
Well, thank you. I'd love to do so.
To learn more about other international topics, visit pkftexas.com/international desk. This has been a Thought Leader production brought to you by PKF Texas, the Entrepreneur's Playbook. Tune in next week for another chapter.